Good morning. Welcome to Goodwill Commodities. In this presentation, we are going to see how you should have applied our simple day trading strategy to gain success in day trading yesterday. Now, let us go and see what happened yesterday and how you should have applied this strategy yesterday. As you all know, whenever I place the cursor on any candlestick, you can see the date and time below. This blue color candlestick indicates yesterday's price opening, which shows that the market opened somewhere around 6,380. You can see the date and time below. After the price opening, you can see the price was trading above. So we had made that very clear. You know our rules and regulation while following this particular strategy. Anything above the green color moving average line is an indication for buying. But we had said whenever there is a gap up, or you can call this as a spiked up opening, wait for the upper band to come, and whenever the price touches the upper band, you can enter into the trade. By the time when it touches the upper band, the color should be in blue color. So you can see that now the price is touching the upper band, the color is blue color, and the price was staying above the green line, which shows that everything is positive for buying. So what you should do is that but we had told you very clearly, if it provides anything within this band, any signal within this band, you are not going to take it. So we are going to take a buy call only if it provides a buy signal, which means a color will be in blue color, the candlestick color will be in blue color only above this upper band. So the next candlestick can be taken as a valuable entry point. So you can take the next candlestick, and approximately to half the length of the candlestick you will place the order, and below the previous candlestick low you can place the stop loss order. Here I want to explain you a new we can call it as a new rule, or you can apply this in this particular situation. So when the price is testing this green color line, so this is applicable only when the price is touching this green color line. So if the price is touching this green color line, what you can normally do was you can place a stop loss of 5 points or 6 points below this green line, when only it is applicable only when the price is testing this green line. So make it very clear, I am repeating it, only if it is testing this green line. This is the new rule we are putting inside. So you can have 5 points below the green line as your stop loss. So why we are doing this? We have for all the rules we have a particular reason behind that, because only when the price is testing this green line moving above or below the green line, it is giving a huge price swing. So if you want to maximize your profit, this is the particular area where the market provides us a huge swing. So but we want to be very careful in this particular zone. And also this is the next thing we are going to include. So if the price is testing near this when the price is touching or providing signals near this green line, so you can see if the price is moving a little bit, the first candlestick, or if you see there is the price is in blue color. If it is above the green line, it should be in blue color. If it is below the green line, it should be in red color. If you feel that the next candle is moving in the same direction like the previous candlestick, you can immediately enter into the trade without following this half the candle rule. I am making it very clear. You can enter into the trade when the price is testing the green line without following this half rule. Only when it is testing this green line, on other situation you should follow the rule. So I will make it clear. So now let us see, you will be into the trade and you would have made some good profit out of this. We will be for every situation. That is a major reason we always request you to follow our videos, because we cannot explain all these situations in a single day, because we need this is all about your experience. If you follow our video every time, that is a major reason we are providing a video support. Keep following our videos, we will clarify all your doubts. So this is the first entry. We made some very good profit, and as you know that we don't take any sell call here. So as I told you just now, we will wait for the candlestick to come down below the green line to take an entry point, because it is now staying just above this green line. So it indicates that still now there is no potential selling. So we need the candlestick, the next candlestick, as I told you just now, if the price is coming below the green line and if it is providing as valuable signal, wait for the closing. And then if you feel that the next candlestick is also following the same direction without applying this half rule, without applying this I told you this half the candlestick rule, you can go and enter into the trade having 5 points above this as a stop loss. So here still we are not here. You can enter into the trade by just applying the next candlestick, just follow this color, the previous color candlestick. So you can straight away enter into the trade only if it is near this green line. I am repeatedly saying no, only if it is near this green line, and just place stop loss just 5 points above that. That's it. So this is going to be the stop loss once the price. And then how I am going to do this, I will explain you. So this will be, that will be my stop loss. I would have been into the trade. Now we are in the trade. Now what I am going to do is that now there is a chance for trailing my stop loss. You can see this lower band is dropping down. There is a chance for trailing my stop loss. So now I can modify my stop loss to the lower band so that I can protect some profit. So initially my stop loss was just 5 point above this green line. Now you can see I can trail my stop loss. That depends upon individuals. We don't say that come on, go and trail for everything. So once you get sufficient profit, that depends upon the amount of fund you have in your trading account. That depends upon your trading plan, your trading target for that particular date. So this is one way of trailing your stops. So now you can see you can make a good profit out of this. So what I am going to do is that, so if you had trailed it, see how we are protecting the profit. It is one best way of protecting your profit. Second thing is that it can minimize your risk. As we always say that trading is all about how you manage your risk rather than focusing on profit. So just we will be running after the next entry point. Let me see that whether we got any other entry point. So it had provided a buy, and our rule says that below green line, the moving average line, no more buying. So we are going to neglect it. See, here comes the next situation. So many times you will face this situation, and we are going to face this again. So in the first two cases, 2 entry points, we made some good profit. So in this particular case, closely watch, the candlestick closed above. I want to know just whether the price is staying following that. No, still it has not sufficiently moved above the next candlestick. So I am not going to consider this point. So this particular area is very good because it has crossed the previous high. You can see this particular area, then the candlestick had crossed. So I consider this as a valuable entry point. Once you enter here, what just you do, the stop loss 5 points below, place your stop loss. That's all. From this green line, 5 points below this, place your stop loss. Now I am not calculating and placing it. It will come somewhere here. So now let us see. Yes, we are stopped out here. So we got stopped out. So there is nothing wrong in that. We know it is a part of game. So but you can see that the stop loss points are very small. Whenever we place a stop loss, whenever the price comes and trigger our stop loss, we are making it a very small loss, so that we can, the next entry we can make it a huge profit. If you see our particular strategy, it is designed in such a way your losses will be small and the profits will be high. Whatever you would have read in your books, everything is applicable in this particular strategy. So here we got a trade signal, but in this particular case you will see that I'll be taking the length of the candlestick, and approximately to half the length of the candlestick I will be placing my entry point. I will be following the same rules. So this strategy is very clear. So now we will be into the trade, and I will be deleting this because I have another tool to trail my stop loss. Here you can see I can use this band to trail my stop loss. So at anywhere I can book profit. At anywhere, if you want, you can book profit. So that in this particular case, you see that this our stop loss, our entry point and stop loss is now the same. So whatever comes will be on cost. So we would have been triggered if I had trailed, because it had provided me a good profit if I had trailed my stop loss. But even you can see I'll be in the neutral zone, no loss no profit zone. Just for situations, for explanation, I'm going to do this. I'm doing this. So the next entry point, you can see we are not going to bother about this signal, just because we know that we will be taking only sell signals if the price is below this green line. So here in this particular area, the first candlestick closed above this. So I'll be waiting for the next candlestick to break this high, because we know the rule is different when the price is touching this green line. I'll be waiting for it. Yes, the price just broke this high, so I would have entered in this area. So this is the way we are explaining. Since this is for educational purpose, we take everything like a live trading. So for example, we can consider that we are into that trade, but as a rule says that 5 point below is your stop loss. Here is my stop loss. So we will be leaving it to see some profit. It had provided us some profit. Now we can see the lower band is entering into a stop loss zone. If the price moves up, we can trail the profit by using this lower band, but we got triggered. So again we got triggered. I think the price was strong in the selling side, because 2 buy attempts we tried and we got triggered out. But we know the range where we got triggered. Only 5 points, 5 or 6 7 points we lost in our sell trade, but losing trades. But when the profit comes, we are running in good profit. So now what I will be doing is that here is a very good entry point. We got just we had broke it approximately half the length. We will be entering into that on the previous candlestick. You can see that in this particular case, you see the previous candlestick is going to be this blue color candlestick, and above this I need to place. So what I will do is that instead of going with this, I can choose my this band itself. That is far better, because this band is here to protect me rather than this blue color candlestick. I consider the stop loss is very high. This is the way of mastering this art. So why we are repeatedly why we are repeatedly posting videos and everything to guide you, because we expect you to master this art of trading, master this simple strategy, so that you can be very successful in day trading. Now we can see there is no doubt you would have made some very good profit. So I am going to delete it. So we will be looking for the next entry point. So it had provided you a great profit. So this is, if you see that whenever you get a profit, you get it big. Whenever you get a loss, it is very small. So that is what trading is all about. Now we got a buy signals, and we are going to neglect it completely. We know that we are not going to break our own rules. Here we got a sell signal. So if so let us see that we will take it away. We will take all this call. So approximately to half the length I had placed it, and above the previous candlestick high I am doing it. So once I am comfortable with this, no, this is a false entry, false candlestick. So after a long time we had identified a false candlestick. Here it is ready to provide a buy signal. No, it was not. So now we will be waiting for it. So here we got a buy signal. So this is the reason why I told you that whenever the price is entering into this, if it provides a signal near this green line, you need not do this calculation of half the length of the candlestick. You can neglect that rule only when it is near this green line. Why I told this? Because this is a very powerful average line. So the price, there will be lot of buyers and sellers focusing on this line. So there are chances the market will be very fast in this area. So that is the reason I ask you not to follow that rule. You can straight away enter on seeing the price. So you can see the market spiked up here. So it went up higher. So if you had missed it, so many people can ask me, I missed this price move, where I can re-enter. Wait for the price. Come on, this band is here to guide you again. When the price is testing this, enter it, and if you are entering in the upper band, your lower band can be your stop loss, few points below the lower band. So that is one of the best way. Now you can see that even if you miss that, the next help is on the way. So now we can see, okay, after a very long time we made some profit in buy by using the buy. So as a buyer we made some profit. Now we can see this is a sell signal. We are not going to take that, as we know that earlier we are very particular in selling. Now we are not going to take it because just it is above this green line. We are not interested in taking that call. Now let us see that here we got a sell signal, a closing. If we get any other candlestick following this or breaking this low, we can enter into the trade. Yes, we would have been into this trade in this particular area. As I told you that we are not going to follow the rules when the price is near this green line. So my stop loss will be 5 points, just my stop loss will be 5 points above this. So let me see that. Yes, we got stopped out here. Okay, it's fine. It's a part of our trading rules. Here we got an entry point, but in this case I am going to look at the length of the candlestick, approximate to half the length of the candlestick I will be doing it, and my stop loss will be here. This is a false candle, false signal. So we had identified a false signal. Now it's providing me another signal, so it should be some valuable signal, because in the same zone we are getting this signal again where we identified that as a false signal. So my stop loss will be somewhere here. Let us see that. So we entered into the trade, and what I do is that I am going to delete it, and what I'll be doing is that since the price had moved up, so you can trail your stop. You can see how I should have trailed my stop loss just by following the lower band. So wherever you get profit you can book it. So we made sufficient profit in this particular area. So now we are entering the closing part. So the market closed. So on this is how you should have traded this simple day trading strategy yesterday. I hope this can create a revolution in day trading, and you can be very successful by using this day trading strategy. If you have any doubt, please contact us. We have one-to-one training session for this particular strategy. We don't have a mass training session. We have one-to-one training session. So if you are not our client, please open a trading account with us. This platform comes with you for free. So that is the most important part in Goodwill Commodities. Have a account with Goodwill Commodities and enjoy your trading and be a successful trader. Thanks a lot for watching our videos. Happy trading. Take care. Bye.